Hey guys, welcome back to the channel, best place for long-term stock investors. Today is going to be a slightly different video. It's going to be a lot more educational, and it's how you can actually cope with losses. Now, as you know, 2022 is a really difficult year, and some of you are losing a lot of money, and so we want to make these videos for you and people like you, where maybe you're down bad, and how you can actually cope with it. What are the key lessons that you need to learn? And of course, guys, none of what we say should be taken as financial advice, purely our opinion, purely educational. Hey guys, before we begin, just to let you know, we have a totally free masterclass just for you to sign up for in the comment section or the description, where we will guide you on how you can build a 6 to 7 figure portfolio using the power of stock investing. Go check it out. Okay, Jonathan, so we have actually 5.
Yes.
Right? We have 5 tips, right, on how you can cope with losses. The first is you have to ask yourself, do you need the money urgently? Now, why is this important?
I think this is a very, it's a very simple question, right?
Right.
It's common sense whether the money that you put inside your investment, how urgent do you actually need it to take it out? Like, do you need to pay I don't know whether it's medical expenses or whatsoever emergency fund, right? But before actually you even park in money into investments, we actually did this pillar.
Yes.
5 pillar in our Instagram. If you want to find out more of these contents, you can actually follow our Instagram. The links, everything's in the description. So the first main pillar that you need to have is actually your active income. So if you don't even have active income and you want to invest in stocks, right, I believe that is not really that advisable because you don't have any blood coming inside your body, to put it this way. There's like no blood pumping your heart, to put it that way. Okay, so once you have your very base foundation of active income, the next one is basically your insurance. I believe this concept that every Malaysian should have insurance, just because one day we will definitely need medical to go through medical expenses and all those stuff.
Yes, correct.
And one thing is that medical expenses is a inflation kind of.
It's actually faster than the typical CPI that we calculate.
Exactly. I believe it's 10.
15%. Yeah, but of course, depending on what you contract also.
Yes,
right?
Exactly.
So I mean, the whole idea of insurance for me is also what we call income protection. So, if you are actually, now you go in a hospital, you don't have the ability to make money unless you get a very nice employer that continues to pay you, even though you are bedridden.
Yes.
But the insurance will help protect your income. So especially with critical illness, let's say you lose your income, now you need to fend for yourself, maybe you have a family, and the insurance serves as a way they'll pay you out, right? Especially if you can structure it properly.
Yes.
They'll pay you out very nicely, and then you can survive for 3 to 5 years without any income. So that's very useful.
Yeah.
So the basic idea of this, must-have pillars, right, is that you want to always start with the defense first. Right, that's a famous saying, in football, right? Offense wins you games, defense wins you titles, right? They'll say things like that, and because that's the foundation.
Yeah. So basically, once you have these 2 pillars, and then the last bit is your emergency fund. Emergency fund, that's very basic. I think most people will say keep 6 months or even 1 year of your living expenses, and then the last bit only is your investment.
Yes.
So make sure that you have the 3 bases ready, then only you think about investment, so that you don't need to think about whether you need the money urgently or not. Okay,
the next one is how exposed are you with the loss? Right, position sizing. This is something that we go quite deep into our SIB course.
Yes.
Right, and just to summarize here, the whole idea is that you want to figure out how much you're willing to lose. Right, in any stock.
Yeah, and it depends on your risk tolerance as well. So let's say you are someone who don't mind losing 50% or even 60% of that capital, right? Those type of people usually go for 1, 2, or maybe even 3 stocks only.
Right.
But let's say if you are not you don't really have that high tolerance for this kind of risk, of course, diversification is the main answer to it's the main solution to your problem. Maybe you need to like diversify, like put like 10 or even 20 or 30 stocks so that you won't feel that painful when it's during the downturn. So it's basically your position sizing, your capital allocation for each company, which I believe this chart, I got it from the SID.
Yes, this is from the SID. Sneak peek.
Yeah, sneak peek. So basically we dive deep into this, whether basically one side is you only allocate like 5% of your money into this company, the other one is 40%. How comfortable are you with this kind of allocation?
Yep, fair enough. All right, guys, if you didn't know, we have a one-on-one mentorship program where you can apply for, where we level up your stock investing based on tailor-made solutions. If you're interested, you need to apply. Not all of you all will get into an interview. It's only 20% of you all will do it, and even fewer will get to hop on the program. But if you're confident that you can qualify, you can click on the link and fill in your details in the comment section or the description. If you're enjoying the video so far, remember to like, comment, subscribe, click on the notification bell so that whenever new videos pop, you know it fresh. Okay, next one. I think this is an important question you ask yourself, right? Did you actually put in work before investing? So Jonathan, why is this an important question?
Right. So I believe every investment that you actually made should be only done once you do your due diligence on that particular company.
Okay.
So so this chart also is actually from our SRV also. So it depends on the time spent on whether do you care about the share price or the business of our company.
Okay.
If you care about the share price, right, you deserve to lose money.
Okay.
I'll put it that way. Yeah.
Okay.
Because share price don't really tell you anything. It's just numbers on the screens. This shows nothing about the business. But if let's say you do research about the company and you know that their business fundamentals are, let's say, not doing that well, and hence the share price is going down, right? It should actually be a signal for you to start trimming some position, or maybe
even though you're in the loss.
Yes.
Right? Because I think a lot of people now are facing like, whoa, I'm down 50%. I'm going to wait for it to recover. Then only I sell.
Exactly.
But if it's a bad stock, for you to recover a 50% loss, that bad stock has to go up 100%. That's not easy. Only good stocks tend to go up 100% consistently. Yeah.
So in short, it's just do your fundamentals checking. Make sure that the business is still fundamentally okay. If they are still performing well and they are going down, I believe it's still alright to ride the wave. You can even consider like buying the company because it's at a discount. Yeah. But other than that, consider like trimming.
And I have no feelings about it. Just cut it. Okay. Next one. Is averaging down the right choice? I think this kind of linked to your point you were making.
Yes, exactly. Because sometimes, not every single time you need to average down a position when you see like it is a loss, right?
Yeah.
I believe
you don't have to buy the dip. Right? A lot of people like to buy the dip.
Buy the dip and then buy the dip.
Yep.
So I believe this quote that is, Warren Buffett usually mentioned this a lot during market crashes is be fearful when others are greedy and be greedy when others are fearful. But when markets are actually really down, majority of people will actually tend to be fearful. And some of them don't even think, they see it as like a kind of like a major discount kind of like event, and then they just keep on averaging down without knowing whether the company is still performing or is not. So I believe this quote has been abused quite a lot, and I see a lot of marketers actually use this quote. It's like just telling you that market's down, just average down.
I think this is very dangerous because a lot of people have the mindset, during a crash, right, you simply buy any stocks so it will go up. I hear this all a lot. Well, first of all, yes, like you said, maybe it will go down, right? Like it's a bad company. The second thing is, you want to do better than the market, right? Typically. So even if you simply pick and it doesn't do better than the market, then you might as well just buy the index. Right? So that's an important bit.
I think that's pretty much about it.
And the last one, long term does not equal to value investing. So this is a very semi-controversial one, right? Where people tend to associate the Warren Buffett value investing with long term.
Yes, exactly. I think this is a very misconception about value investing.
Right.
Because value investing means you see value in a particular company and you see it as a discount, so that's why you buy it.
Yes.
But let's say what if the company does not bring that value to you anymore? I believe that should start to trigger you to like think about something else already, which is not even holding that company. Maybe you need to start to sell. So what does this mean is basically it depends on how is your conviction towards that company.
Yep.
Has the conviction changed or not? Let's say the conviction still remains where the market is crashing. I believe that it should bring you to buy more of that particular company because you see that it's a cheap, really cheap discount. But let's say, what if they are selling off like their core businesses and maybe let's say they are even diversifying their business segment.
Yeah.
And they are not really making any profit or cash flow, right? That should actually reduce your conviction about the particular company, and you should not hold any like emotional attached towards the company.
Yes.
Because I see a lot of people think that when they invest in something, they have to hold it for the long term because that is value investing. Yeah, and that should not be the case. It should based on your conviction of that particular company. Yeah. So
I totally agree. I think just to add before we end, right? So I can kind of understand why people are confused between long term and value investing because Warren Buffett talks about the long term a lot.
Yes.
But the key thing, guys, you want to take note of is that he says that the ideal holding period is forever. Now, people always like to hear about the word forever. They don't hear the word ideal, right? People don't ask, what are the ideal conditions that you need to have before you can hold a stock forever? And as you already talked about some of the few, right? If there's certain business changes, that changes your conviction, that changes the way the company is moving forward in a negative way, then it shouldn't be a long-term holding. You want to hold stocks that are good over the long term. Keyword is that they are good, and you reserve the right to change your mind anytime. And this is a very basic mistake that we see all the time that I myself have made as well, where because a stock is down X amount percentage, then they start telling themselves, no lah, when you invest in something, it's always for the long term. And so they just keep it there. And guess what? In the long term, they still continue to lose money.
Yeah.
And the reason is because they have misunderstood, sometimes not really their fault, the Warren Buffett quote. If the long-term outlook changes, you should change your mind as well.
Yeah. I think I'll end it with just one sentence only. You should be cool and rational with your investing decision. Yeah, that's about it.
That's a good one. All right, guys. Hope you enjoyed the video. If you find someone else in addition to yourself that is not doing so well with their portfolio, maybe send them this video for them to check out. And of course, remember to like, comment, subscribe as the usual stuff. And we'll see you in the next video.